Good evening, ladies and gentlemen. Today is Monday, and we're having a market review following the events with the assassination of General Soleimani in Iraq and confrontation that United States and Iran might have after that. And as a result, we can see the market fall on Friday. It's falling today based on the futures, like they are showing minus 0.62 on S&P and minus 0.75 on Nasdaq. We can see oil is up 1.22%, and we're looking at gold, and we're seeing the gold up 1.69%, continuing its uprise from 1,480 sometime like 3 weeks ago. Now it's almost 100 points up. Let's look also at some foreign markets. How do they react to events in Iran, in Iraq, and we can see that Nikkei is down almost 2% and FTSE down 0.97%. Nikkei is already closed, FTSE is open and trading, and we can see that all markets reacting negatively on those events in Middle East. What could happen actually right now? Since the market is overvalued, like I normally say, and I'm still like insisting on my point, the market is overvalued, and any event, either geopolitical or economical event, can really force the market to go lower. And some analysts are saying that market can drop double digits, I mean like over 10% in the months of January. But as I see, the market always finds the buyers at the lower level. Like it happened on Friday when futures were showing minus 1.53% on Nasdaq, but ended up being down only 0.7. So half of the losses were returned like at the end of the day. And basically what people are looking at it, and they just realize that like market is immune from the recession, market is immune from the correction, and people just think that there is no risk of buying stocks at the lower point, and they just keep buying the stocks, and that's why any tried corrections that we've seen in the last couple of years, they always found buyers at the bottom. And it happened on Friday, and we see today, and as I see, the Nasdaq futures were down almost 1%, now it's down 0.7%. It means that the buyers are already in the market, and they're trying to shop around by buying oversold stocks even at pre-market. And we can see like the stocks like Apple. Let's look at Apple, and we will probably see that the stock is trading lower, but not but not much lower relative to its Friday's close. Let's look at Friday's reaction on Apple. On Friday's, Apple opened down like $3.20, went down only 60 cents from the open, and closed 3 points over 3 points, closed at 297. It's actually closed where it opened. Today we see another drop in Apple, and that's actually at 295.19. It's lower than Friday's low, so it means that Apple may start going lower, because stock had a very nice up movement for the since summer of the last year, and so the stock has to correct in some way to find new buyers. So what's the sector that could benefit from those events that we're having in the Middle East? And one of the sectors, like I mentioned before, it's oil. Oil, we're seeing it's up. It was up 4% on the initial news on Friday. Then it's corrected, like gave back half of its gain, and now it's like up 1.17%, but it's still not as high as it was on Friday before the open. And oil is the one beneficiary, and if we look at the oil stocks, there are a lot of undervalued stocks in the oil sector, because energy sector was a major laggard in the market over the last couple of years. But still, when we look at the energy market, we realize that alternative energy is taking more and more space out of the real energy. and I would rather buy some solar energy companies than to buy real oil companies. If we're talking about oil, I only found like one company that I would be buying in this market. This company called DVN, and this stock it was up only 31%. The stock is in the middle of its 1 year range, and I would buy this one because this stock actually has the very little debt. If we look at the stock, it still has like over 3 billion of debt, but it's less than the other companies have. For example, if we look at the other companies, for example, like Marathon Oil, like MRO, which is just oil producer, we can see that the stock trades, it's actually a little bit more, 4 billion. So all the oil stocks have a huge debt. And in case something goes wrong, those companies really can declare a default, like we saw it in 2016 when the oil dropped below $26. A lot of oil companies declared default, and even given the fact that oil came back from basically being $26 to close to $64, the stocks are still not trading at those prices they were trading in 2016. Let's look at the MRO, for example. Look at the summary and look where the stock was trading in 2016 when there was the worst of energy market. In 2016, we can see the stock was trading at $6. Actually, it's double since then. But if we look at some other names, like for example, companies like Apache, APA, the stock actually came back recently. It came back from being like $18. But if we look at its like 2016 low, that's what it is. It was $36, and the stock was trading recently half of that level. So it's very risky buying the oil companies. Oil, gas, it's still very risky. And I would simply buy solar energy because that's where Warren Buffett recently invested. And that's what really should benefit from rising price of oil, because when people see oil is rising, for example, gas is rising, people are buying solar batteries and they install it on their roofs, and instead of paying for oil, for a gas, they paying less. They don't pay anything, they just pay for installation, and they just simply get the energy for free. So for this respect, I would consider buying companies like CSIQ, which is a builder of a large solar projects. The company is one of the undervalued stocks in that sector. I would buy ENPH, which manufactures converters for a solar batteries converters. So this stock is 29. It had a nice move. I just found that stock and recommended it a little bit over a month ago, and we can see that the stock since December 31, it went up from 25 to 29, had a nice rise, and I'm still recommending the stock for buying. Also in the solar energy space, I would recommend company RUN, which is also, we're seeing like despite the market falling, the stock was higher on Friday, and I would consider buying this stock as well. So I just named 3 solar energy companies, the ones that I will be buying. And also giving the conflict and understanding that military spendings are always increased in the situation like that, when when money has to be spent on drones, on weapons, on on the arm, on like any like any military event, any like terrorism causes increase of military spending. And I would buy companies like KTOS, which I recommended past Friday. The stock moved up on my recommendation, was up $2. Today with market down, the stock is up again. And I would also buy a stock called AJRD, which is also considered a defense company. You see it went up very nicely on Friday, 48.79. And I think it's gonna break its all-time high, 52.84. And I would buy a company called AVAV as well. Other than that, AVAV, you see, I recommended all those companies to buy, and you see AVAV had a very nice run. You can see it. I recommended it on Facebook before the market opened. You can hold me liable for that. And that's why I see the market. I see the potential winners and losers in this market, and that's how I make money. I make money by identifying the sectors that could benefit from the current events. And that's how I do it, and that's how I teach people to do it, and that's how I build my portfolios. I really hedging right now, buying some bear ETFs. And right now I hold ETFs such as TZA, which is a bear ETF for small caps. I'm sorry, it's not AT&T, it's TZA. And let's see how it's acting. It's up 71 cents, so I'm making 2% before market even open. And that's how money are made. So you're identifying the potential winners, you're identifying potential losers, and you're trying not to hold many stocks for long purpose. You're just getting rid of those stocks because most of the stocks, they're falling in a down market. That's what I wanted to say today. Thank you for your attention, and talk to you on Wednesday. Bye.